morning to you, Erin. Thanks for being a part of this conversation because over the next few minutes, I would assume that these are going to be some questions that you are just asked on a regular basis because when it comes to liability insurance, that's pretty norm for most people, right?
Yeah, it is. In fact, that is, people will say, well, I have this really old car, I need PLPD. So what we're dealing with there is you're trying to have liability coverage on your vehicle that's required by law.
Mhm.
And an element of that is the medical portion too, and the medical liability that you can have, even in a no fault state, just being protected in case you do something to somebody else on the roadway.
Yeah. Back in the day when I was growing up, 16, first car, so and so forth, we would, uh, you know, uh, we looked at, okay, full coverage if you bought a new car, PLPD, is that even a term these days? I don't
It,
even know.
it, it kind of is a slang term in the industry, that it's so common in our culture that even insurance professionals or agents that try to get rid of it can't. So
Yeah.
it's like, okay, we give up. We're just going to use the slang PLPD and just be done with it. And so it's basically a term that says I don't have physical damage coverage and I don't want to pay for that.
Yeah.
So it's what you need to get down the road legally in the state of Michigan.
Very common still this day and age. I know we're gonna.
Yeah,
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 go ahead.
yeah, more than you would think. I think in a community where we have a good diversity, socioeconomic, right? Is that with sometimes people may have a better car, more reliable, a little bit newer car, but oftentimes for many families in our area in northern West Michigan, they'll have a second or third car that or even the kids' car, that is just a little bit older and might be 10 to 20 years old.
Mhm.
And they don't want to have that kids insurance cost plus having full coverage on that car. So yeah, they'll insure it for liability, medical, legal down the road, and that's it.
And I know we'll talk more in depth probably in the future on that particular conversation where the pros and cons to both.
Hmm.
I think that would be a very good topic. But let's dive into individual liability insurance. And how does it work like kind of in everyday situations if you don't kind of mind building the foundation here as we chat this morning.
Yeah, so liability is arguably as important, or probably for most listeners are going to be surprised by this, but more important actually, even though that's the legal requirement to drive on the road, because of the size of situations you can get yourself into in a really bad accident where you are responsible. So remember, we're in a no fault state, and what your car insurance company pays for is your medical, or through your health insurance, and it pays for physical damage on your car. When you deal with a situation where you go through a red light, you accidentally just for 1 second looked at your phone and caused a really bad accident, liability insurance is built into your car insurance. It is built into your homeowners and your renters and your boat and your motorcycle. So all these things have liabilities packaged into the policy. But part of what we're really going to talk about today is why is it really so important to really understand and have the right liability coverage? And that's kind of what we want to unpackage today.
Yeah, and definitely want to dive into that. Before we get started, even on that side of it, does liability insurance or that line in our policy, is that standard? Does it just come with it, or should we be asking that question? And I assume there's some additional questions we should be asking. But what's that first stage? Hey, this includes liability insurance. Do we even have to ask that question?
Yeah, because in the state of Michigan on auto insurance, the minimum liability coverage that you have to have by law is 50,000 per person, 100,000 per accident. That
Mm,
went up in 2020 from 20,000, 40,000. So what does that mean? You
mm,
really hurt somebody and you get in an accident, you have $50,000 of coverage. Okay, that sounds like a really pretty good number. Well, it depends. How badly did they get hurt at your expense? In other words, you did it, so just understand that that liability coverage is a question you should ask, and
mhm.
be very cautious about taking state minimums. Be very cautious about even taking 100, 300. If that's what you have on your car insurance and you and your partner, your spouse, significant other, you make 50 to 100 or 100,000 more between the two of you. I'm going to argue that you need to have at least 250,500, which a lot of people listening may kind of recognize this talk.
Mm,
But then also, like we're going to further talk about a little bit later, is consider this thing that's out there called the personal liability umbrella policy. This is an extra million or more of coverage on top of all of your other liability. So if you think of it as an umbrella, it literally is going on top of liability that's built into your auto, renters, motorcycle, homeowners. It goes over top to protect you. So it's the really bad situations that you did not mean to cause, Chris. You
mm,
didn't mean to get in an accident. You didn't mean to go through that red light, and it just in a blink of an eye happened. And you need to be asking the great questions. And equally as important is, companies like State Farm and agencies and team members that work for agents need to be asking really good questions about your assets. We should be asking those questions. How much do you have to lose? Have you saved in retirement? What are your savings and checking account looks like? How much do you make per year? And I think I'm still surprised with the number of people like, yeah, why do I need to give that to you? Why is that important in this
mm,
conversation? I just want an auto quote. Okay, this is where you understand as a consumer and becoming educated and informed about what you should have based on what you are trying to protect. The more
can I
you have, the more
go
you
ahead?
have. No, the last thing I was going to say is the more you have, really, or the more you've earned as the years go on, the more you have to protect.
Okay, that makes sense because the kind of the reverse, if it's okay to ask, is you get in that accident. Um, is it where you could actually run out of assets, run out of insurance, and you still owe more than what they're trying to go after you at? If that makes sense, is that sort of
It's 100% correct. So let's go back to the analogy. The state minimum in Michigan is 50,000. So you cause a serious accident, and this person, unfortunately, heaven forbid, but it happened. They're in a wheelchair. They're a paraplegic, quadriplegic. You know, you caused the accident. It's on the police report. There was eyewitnesses, and what's going to happen is if you have really good income, if you saved, 50,000, 100,000, quarter million or whatever in your 401k, it is exposed.
Mhm,
You have to know and or get a professional to help you have the right liability coverage because if you get sued and you lose, your 50,000 is going to be paid, and if that's all you make, no disrespect to these people, but if you're on welfare, Social Security, disability, and you don't have any savings, again, they're not going to get more than 50,000 from you, right?
mm,
But it's those that have worked hard and are saving for their retirement, and they have some money in emergency savings, and they make, in the household 50 to 100,000 or more, between the two of them. Those are what we're really kind of getting into is that you're trying to build this liability wall and not be overinsured, but
mhm,
have the right insurance, and that changes over time. As you have more savings and earn more money, you need more liability insurance.
mm, okay. What can I ask? So let's say because you brought up a very important word, overinsured. If you get to that 250,000 or more mark, can you expect, or is I guess it's based on each individual scenario, but can you expect if you do get into an accident that that's gonna all go away? Like, is there a push to maximize the payout, I guess is what I'm trying to say. Obviously, everybody has a heart. You want that person to be okay. You want that
Mhm.
person to be able to, whatever injury.
Continue on in their life. That's the
Yeah,
humanitarian side.
exactly.
Not everybody thinks that way though, right?
Mhm.
Like
True.
you want to think that you'll be that way, but then it costs real money to buy insurance and to pay for it monthly, and where's the money going to come from?
Yeah.
But I think you're heading in the right path in terms of like, well, what if you're overinsured? Well, then they're just going to get more money. Well, hold on. The
Mhm.
insurance company is going to have to pay if it was negligent. That's why you have the liability insurance. For example, one of the accidents we had recently was Hitting, unfortunately, one of our insureds hit a pedestrian,
Mm.
shattered his leg,
Wow.
and they had to come after that policy
Hmm.
and the umbrella. The auto insurance paid 250,000 and State Farm's personal umbrella policy paid 600,000
Wow. Wow.
to help that dad who had three young kids who
Mm.
couldn't work the same way that he could before the accident.
Exactly. Yeah.
And that's really, if you think about a lifetime of income for a young dad, isn't that much money. 850,000 is a real number,
Hmm.
but what about you? You're 45 years old. You saved a half a million in your 401k and you make 75 grand a year, for example. You got a really great job and you have minimum liability on your car. They, the plaintiff attorney, unfortunately, is going to come after you
Hmm.
and you're going to have your wages garnished, which is not very fun to hear,
Hmm.
and potentially your 401k hit because this person that's really seriously hurt by you, they got to have money to live on. You change their life in a heartbeat. And so that's what we're really talking about is liability insurance is not very expensive. It's very cost effective built into all of your motorized policies that you have. Anything you know, side by sides, motorcycles, golf carts, everything that has a motor it has liability insurance and everything that you own with State Farm underneath of that the umbrella of extra liability can go over top of all those other liability policies.
Interesting conversation today, and I'm glad you're breaking it down the way you are. It's easier to understand that, and it is also because and tell me, I'm sure there's a percentage out there that, and I know have been in that situation over the years, is okay, how cheap can I get my insurance? And
Hmm.
all I
Hmm.
care about is how much I'm paying on a
Hmm.
monthly or 6 month
Hmm.
basis on it. And there's a lot of people that are that way. But when we look at it just as um, that tunnel vision, we could be putting ourselves in jeopardy.
Significant jeopardy. So I look at it, Chris, as and you've heard me say this before, as catastrophic versus probability. 100%. There's people listening going, Aaron, whatever. Chris, come on, man.
Mm-hmm.
Well, hold on. The probability of you being the person that inadvertently, accidentally, wrong place, wrong time, cause a really bad accident, and you're the one that's responsible in getting sued, the probability is 1 in 1,000, 1 in 10,000, whatever number you want to put at it. But the consequences is if it's you. So get the lowest premium for your policies with the correct coverage,
Mm-hmm.
right? Have a good evaluation of what do I really need based on my savings, my assets, and my retirement savings and my income. What do I really need? I don't want to be overinsured. I don't want to pay more to the insurance company than I have to.
Mm-hmm.
So this is the difference is like really pinpoint your need specifically to you. And that's what I think we do well at my agency. We do that really well at State Farm and where we care enough to ask tough questions that you really don't want to answer and you really don't want to get into this. You just want a car insurance quote. I
Mm.
just need insurance. Like, please leave me alone.
Yeah.
Okay, we get that. We're human too. We're consumers. We don't, I don't want to have to call the garbage company and get a discount on my garbage rate because it just went up 50%.
Yeah.
Well, guess what? I'm doing that this week.
Uh, Well,
So people call us to do the same thing. Hey, your insurance needs to go down, otherwise I'm shopping. I'm leaving.
yeah.
Um, we get it, man. We're real people trying to do a good job in a real space and help you be protected for your family in case catastrophically a really bad thing happens to you.
If you are just joining us, we're talking with Erin Doan from Erin Doan State Farm Insurance, talking about individual liability insurance. And my next question is, and we've talked about this umbrella term, and I think it's pretty given as you've kind of dabbled into it in our conversation today. But overall, can I assume, and maybe I'm wrong, is that we can get liability insurance up to a certain amount, and then we have to purchase an additional element of insurance, which is the umbrella side of it. Is that kind of how that works?
Yeah, that's a great question, and let me kind of put that in terms of the State Farm world. We're the largest auto insurer in the country in terms of number of auto policies on the roads. And so with us, the minimum liability that you have to have is 250,000 per person of protection that protects you if you hurt one person in an auto accident, and a half a million, 500,000 per accident. So you cause a multi-car accident, multiple people get hurt, you have a half a million.
Mm,
That's the minimum coverage in order to have the umbrella go over top. So what does that mean? It means basically your car insurance liability pays first, and then the umbrella is picking up excess in anything above the 250 or the 500,000. So
okay.
was that kind of clear how that
Yeah.
works? Yeah.
That Can you see that that adds up quick? I mean, in your experience over the years, you
hmm
get in an accident in an intersection and it's a three-car accident or multiple. Do you see that that becomes, even when we talk about amounts like 500,000 or 250,000, that could be wiped out just instantly?
Yeah, and yes, 100%. And so therefore, what are you trying to build? You're trying to build this liability wall, is what we call it. So
Mhm,
what is your need? And so if you can imagine building like a brick or a masonry wall, and well, when you're younger, perhaps in your 20s, is you don't have much to lose. Maybe you're making $15 an hour and you don't really have a savings account. You just started your 401k or your Roth IRA. You don't have much to lose, right? But so you have, 250,000, 500,000. That's probably what we would say. And you're probably at this exact moment in your early 20s, maybe the umbrella isn't necessarily, it's not needed for you to have an extra $1 million of coverage per se. Now, getting above in that position is kind of where we look at it. So you can get umbrella policies. This is this excess liability coverage that goes over top of your home or renters. It goes over top of your cars and motorcycles. So this extra million can be a million, 2 million, 3 million, and we go all the way up to 10 million that we can quote. And so that's a high net worth person, right?
mhm,
Is that really is looking at that. And in fact, I think the largest umbrella policy I have on my books is 5 million. So that's a pretty high net worth person that is saved really well, that owns a really good business, and they're just trying to really protect all those decades, right? They're in their 60s, decades of saving and blood, sweat, and tears in their business, and now have a sizable asset they're trying to protect,
mhm,
so that that the insurance company would have to pay, and they wouldn't have to pay out of their savings, their retirement, even some of their real estate that they would have to liquidate in order to pay if they were found negligent and guilty in a lawsuit of negligence and had to pay personally. They're trying to protect that. So they build this liability wall as high as you need it personally. So that's where really good questions comes from my staff and I, at State Farm, and asking what do you really have that we're trying to protect on the liability side.
mm. Good information. We put on the Facebook post as part of this video that there are certain questions, and I'm glad that your team asks questions of that potential client. But what are the questions that we should come in with that, and maybe that person isn't always walking through the door at Erin Doan State Farm Insurance, but going somewhere
Wherever
else.
they go.
Yeah. What are those couple of questions that are so important to ask? And let's start there.
Yeah, I think this is when you're talking about coverage and you're thinking about my car's newer, what are my, full coverages that I need? If we're going to talk about comprehensive, which is everything but a collision, but that confuses people at times. And the easiest way I can say it is, if it's not collision, it's, fire, theft, vandalism, hitting an animal. Those are comprehensive, and there's certain deductibles. Sometimes people, the with a really older vehicle but still worth quite a bit, they'll take a bigger deductible. So I think you want to kind of get a sense of, Would I like comprehensive? If you live, in the woods more in our rural West Michigan listening area, a
Mhm.
lot of people want to keep comprehensive and have PLPD. So they call it like PLPD plus.
Yeah.
They've
Yeah.
got comp on it, like, woo, I got comp.
Yeah.
And then the other thing is, of course, collision. Deductibles in that space go up to $1,000. But then once you get into that space, there are some boilerplates that come with the policy that we really haven't talked about today. But
Mhm.
then it's getting into this conversation about the liability and the medical, especially on auto. Medical payments. When they happen, they are tied. A lot of people get confused that in a lot of cases, if it's not Medicare or Medicaid picking up, there is this kind of back and forth thing happening between your health insurance and car insurance in an accident.
Mm.
And so, what the car insurance companies are really cleaning up this year, State Farm and others, no matter where you go, is your health insurance going to pay first and primary? And you've got to be given a document from your health insurance company that has everybody that's in the household listed on a document that says, yes, our health insurance pays first and primary. And that's becoming a thorn in a lot of people's side right now on this side of liability, which is the medical part, is just wait, I got to get this letter. It's a pain in the butt. I don't have time to get it. And at this point, the car insurance companies are saying it doesn't matter. If you don't get it, you're getting moved automatically to unlimited, which isn't a bad thing because
Mhm.
then that you're making your car insurance company like State Farm pay all your medical bills if you get really hurt in an accident. So everybody's asking, like, why do we have to do this all of a sudden? Well, it's because at claim time, many people actually thought there was coordination and that their health insurance was going to pay first in an injury, but
Mhm.
it's not.
Mm.
They are not paying first.
Is
And
it
it's act
politics? Is it
it,
politics between, you know?
it's mainly kind of like not requiring it in the past through the law or insurance companies really being forceful in this space of requiring it as a rule. And now what insurance companies are doing is these claims in this space are so high that they're paying unexpectedly because they believed in good faith that they were coordinated. And
Mm.
so shame on the insurance companies for not double checking. And now what they're doing is saying, hey, when you push a balloon really hard on one end, it comes out the other side.
Mhm.
This is what's going on in that space is why am I being bugged about something I've never been bothered about, especially even since 2020?
Mhm.
Well, it's because of all of these medical claims that were supposed to be the health insurance first is not that way, and the car insurance companies are having to pay and here's where the rubber hits the road. They've not been collecting the right premium.
Mm.
And so you could say it's a money grab, whatever you want to say. That's fine. All we want to do is you got to pay the right premium for the right coverage based on what you have because there are many people that have certain health insurance companies, I'm not going to
Mhm.
mention, where they are primary and first, and that's a better health policy.
Mm.
And they can pay less in car insurance because they have a better group health policy at work.
Mhm.
And
Which is
because they
also
do, it's a great benefit, pay less car insurance. There's a
absolutely.
direct correlation.
And that's the conversation. That's the
Hmm.
question. That's what needs to happen because it sounds like even in the last few years that you and I have been talking, is that there has been so many reforms in the industry, and it's not necessarily reform. And maybe that's just part.
Clarifications, maybe
Oh,
adjustments,
okay, there you go. Okay,
addendums along the way. So the big reform happened in 2019 and it came into effect July 7th of 2020. So
okay,
no fault reform in Michigan, that happened in July 7th of 2020. It there was the first reform of our car insurance law since it came out in 1972.
okay, okay. So a lot of what we are hearing or seeing that sort of the clarification as you mentioned there, because you want to kind of correct things as you go because things are changing, things more expensive. You you know you hear about different states. like we took in the past, we've talked about California with insurance issues there, and not enough, in kind of in the pot
Hmm.
for everybody with some of the disasters that are happening there. So uh, these changes that are happening, are you, from an insurance agent standpoint, able to get all of your customers or even new customers up to speed on it, and feel confident that that everything's going in the right direction? Does it sort of make sense a
Yeah,
little
so
bit?
I think in this last topic on medical liability and who's responsible for paying bills if you get hurt in an accident, that's
Yes.
what we're talking about at this moment. So I would say to an extent, Chris, but if you think about it from a human standpoint, well, wait, I know this law changed a few years back. They don't know what year it was,
Mhm.
and we didn't have to do anything, and that's the way we want to keep it. And what we're saying, State Farm and other insurance companies are saying, well, no, what's happening is you have to have the correct health insurance
Yeah.
in place. And so people are ignoring, which I would say if you have gotten a text or an email from your State Farm agent's office, or from your insurance agent, if you're an independent, go through an independent agency, and they're requesting proof of health primary as your health insurance, they're not joking, they're not doing it for fun. They're not doing it to bug you. They have got to have it and will hound you. And we're trying to get it before your car insurance medical portion goes to unlimited and your
Mm,
premium goes up. Some people have been choosing that. We're not talking about a huge dollar amount. It can be $10 a month per car. And that may sound like a lot of money if you have four cars,
mm,
but $40 a month to have unlimited medical if you get really hurt in an accident, we're going to pay for your medical bills the rest of your life
mm.
related to the car accident,
Yeah.
the
That
rest
was
of your life.
that was a question I wanted to ask you. Was early on you'd mentioned it's not a lot to look at this, to have this as part of your policy, and
Hmm.
obviously everybody is different. That formula
Hmm.
is different,
It's different. It's a
but
rule, just a rule of thumb, $10 per
yeah.
car per month.
Do
Yeah.
you, when you say that to those that are in front of you and you're talking about that, do you see that most people are like, "Oh, that makes sense. Go ahead and include it." Is
I,
that?
w- I would say to an extent, let's kind of break it down maybe. Um, 25% will go, well, what else can I do? What are the minimum next options? I
Okay. Yeah.
would say 25% is, well, what's the most I can have that's reasonable? And they'll pick maybe 500,000 of medical coverage.
Mm,
And then others will say, well, is there any other options? Well, if you're not on Medicare or Medicaid, there are no other options other than unlimited or coordination at that unlimited coordinated at that point. So the topic we're talking about is this coordination of benefits from your group health insurance policy that isn't actually where your health insurance will go first if you're injured in a car accident. So again, the unlimited portion is an option, and I would say about 25%, yes, Chris, say, hey, just do it. We got two cars, it's $20 a month. I don't want to have any arguments between the health insurance company and the car insurance company for $20. Just do it.
mm,
And then others, Chris, the other 50% are like, yeah, there's no way. I'm sorry, in our community, with paycheck to paycheck for
mm,
half of our consumers or more in our communities in western, northern, rural Michigan,
mhm,
yeah, they've got to they just can't do that. So they're looking at 250,000, and that's our minimum where you say, hey, State Farm, will you pay the first 250,000? Now let me clarify this, which is really interesting. Is most other states, Chris, the medical portion maximum in many other states neighboring and around the country is 25,000 medical or 50,000 at the most.
mm.
So Michigan, I think, kind of knew, in the legislators, this is one thing they probably got right, is saying that's just way too low.
Yeah.
We need to have the minimum be at least 250,000 if the car insurance company is going to pay first. And what happens is if you choose that, and keeping your insurance as low as premium on the medical side as possible on your car insurance, that 250,000 does go up pretty far away, but again, it's not catastrophic.
Mm.
I hope you have, if you choose that, I hope you have some other health insurance,
This,
yeah.
yeah. this is and that's your employers, as you mentioned, being able to, because having overlap isn't a bad thing. It sounds like.
100%. Yeah, I hoping you have some kind of, even the Affordable Care Act, health insurance, is something. Again, with people that say, "Well, I've got a 12 or $17,000 deductible." Well, just
Mhm.
realize if you have 250,000 in an auto accident coming first, the deductible may be waived potentially. I really haven't that I can know of some Affordable Care Act situations that are really really bad, but that would be something that having that health insurance would matter. Even if you did have to pay that deductible first, at least you would have coverage on the front end, have this deductible, and then have coverage going forward.
All right. I know there's a lot more information that we could dive into, and well, obviously pick this particular subject back up in the future, and
Hmm.
dive even more into it, and try to answer some questions that that you get asked on a
Hmm.
and your team get asked quite a bit. Take us through how they can contact you, how the listeners and viewers can reach out to you. Let's do that if you don't mind.
Yes, please. Thanks, Chris. So we are on US 10 in Ludington, about a half a mile east of Meyer. We have an office building that we're open 9 to 5, and we do come early to meet people and stay late if we need to, and help there. We have a red drop box, which is really nice. It's locked. You can leave things in there. You can reach us at 231-757-3115, or find us on the internet at ludingtoninsurance.com, serving all of Michigan, actually, not just Ludington, but 35% of my business is outside of Mason County.
Hmm, yeah, yeah. Well, and people need insurance of
They do.
many different types, and we just scratched the surface on a part of that today. If you missed any part of the segment, obviously it's right there at the WMOM and Hot Country Hits Facebook pages, and as well our YouTube channel. Hit that subscribe button. But even taking that next step and contacting Aaron and his team there at Erin Doan State Farm Insurance is such an important part of making sure that, and it is when you were talking earlier, especially earlier in the conversation, these accidents that could happen, and again, it can happen at any time.
Any
uh,
moment.
yeah, is that you want to make sure that you are covered, or you could lose it all.
Hmm.
And I think it's important to have that, or lose it all or more, in that particular scenario. Aaron, thanks for being a part of the conversation, and look forward to continuing that conversation here in the near future. Okay,
Thanks, Chris.
you got it. It is 102.7 Mom FM and Hot Country Hits 99.9.